How to analyze an Elliott wave price structure. How to analyze an Elliott wave price structure. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And for Elliott Wave Trading, our website is www.24elliottwaves.com. The title of the video is how to analyze an Elliott wave price structure. Alright? An Elliott wave price structure is an Elliott wave pattern. When we are talking about Elliott wave price structure, we are talking about the internal wave, okay, of an impulsive wave, the internal wave of a corrective wave. All right. So we want to see, okay, the architecture, the structure of the price move from A to B. All right. Now, how do we analyze the structure of a price move? All right. The general rules, talking about the Elliott wave principle, is that an impulsive wave, so when we are talking about an impulsive wave, I need to clarify this. The purpose of this video is to help traders avoid Elliott wave mistakes. So by being able to analyze an Elliott wave price structure, one will be able to avoid Elliott wave trading mistakes. What we have noticed that a lot of traders know about the wave principle, the rules, the patterns, but sometimes they make mistake because they do not know how to analyze an Elliott wave price structure. It's very critical for Elliott wave practitioners to know exactly how to analyze an Elliott wave price structure. So one can recognize a pattern, but it is another thing to know how to analyze the pattern. So by being able to analyze the pattern correctly, one is likely to make a profitable trading decision or investment decisions. All right. In order to time the market, you want to know where and when to buy, where and when to sell. And that will come not from the knowledge of the wave principle, but being able to analyze, the wave pattern. All right? In order to avoid, Elliott wave mistake, especially to master, wave price structures analysis, one must consider three things. So when we are analyzing Elliott wave price structure, we must consider the short-term trend, the medium-term trend, and the long-term trend. What do I mean by that? So when we look at the price now, we are on a monthly chart, and I ask you on this monthly chart, what is the price doing now? What will be your answer? What is the price doing now in the short-term trend? Looking at this chart, what is the price doing now? So, because we're on a monthly chart, when we talk about the short-term trend, you may look at a few candlesticks back here to analyze what the price is doing now on this monthly chart. So, the tool that we will use is channels. So you will say, right now, George, on this monthly chart, the short-term trend is a consolidation, and the price at the lower part of the channel. Is correct, yes or no? That's what the price is doing now. Right now, for short-term trend, that's what it's doing now. So you may also say, right now, George, the price is going down, in a horizontal channel. So the price in a horizontal channel, and right now, is going down. Is correct, yes or no? The price is an horizontal channel, and is going down now. This is what the price is doing now, right now. That's correct. Everybody agrees. So when we are analyzing an Elliott wave price structure, we must consider the short-term trend. So we see an Elliott wave pattern. Is he relating to the short-term trend? Is he relating to the long-term trend? Is he relating to the medium-term trend? Now, sometimes traders will see an Elliott wave pattern. They will analyze it, but they will analyze it wrongly. How does happen? They see the pattern, they recognize the pattern, but they don't know whether this is a short-term pattern or whether this is a medium-term pattern or whether this is a long-term trend pattern. So because the Elliott wave pattern are fractal pattern, we want to allocate each pattern to the correct time frame. So if I ask you again another question now, and I say, okay, looking at a medium-term trend, okay, what is the price doing now? Okay, so we will expand it. So we will say, okay, we consider these few candlestick bar here, medium-term trend. Okay, let's call it a year. Okay, in a year time, what the price has done, medium-term trend, what the price has done. Okay, so we will say that right now, it looks to us that the price, okay, in the medium-term trend, we can say that the price went up. Okay, we can see that it went up, and then it's pulling back now. Okay, but we can also say that, okay, in the medium-term trend, the price is in a bigger channel, the red channel here, and in the medium-term trend, it went up and it's pulling back in a bigger red channel. That would make sense. So for the medium-term trend, the price went up and pulled back, okay? And it's also in a bigger red channel. That would make sense. Okay, if you disagree, put it in the comment section, okay? If you ask the question now, in the long-term trend, what is the price doing? Okay, we can say that in a long-term trend, so we may consider maybe 10 years or more, okay? 10 years or more, and we will say, okay, the price went up, and then it pulled back, and now it's going up again. Okay, or we may say that the price went up, and now it's consolidating. So we see that we have first, we can say that in the long-term trend, the long-term trend is a bullish trend because the price went up. It went up big time, and now it's consolidating in a bigger red channel here. So bullish progression followed by a consolidation, or bullish progression followed by a correction. So you may be wondering why I'm saying all this now, okay? So sometimes trader will go, for instance, on a 50-minute time frame, which is a lower time frame. They will count 1, 2, 3, 4, 5 waves, and they will say that the trend has ended. But it's not ended. The trend has, you may say that the trend has ended on the 50-minute time frame. The trend has ended in the short-term trend. Now, the challenge trader will face is to fit in or to connect the short-term trend and the medium-term trend and the long-term trend. So if you are able to know the long-term trend, you are able to identify where we are talking about the medium-term trend. You can connect the short-term trend and the medium-term trend, and then connect it with the long-term trend. It makes sense? Look at this, okay? So I draw an horizontal line here, okay? It's a bit difficult to explain this, so be very patient with me. I'll try my best to explain what I'm trying to do here, okay, to help you avoid Elliott wave mistake and connecting the dots of short-term trend, medium-term, and a long-term trend, okay? So you see the orange line here, from here to here, okay? We will say that the price went up, so from A to B, okay? All right? It makes sense? So if we are in a short-term trend, we are on a 5-minute time, we say that, okay, 1, 2, 3, 4, 5, the trend has ended on a 5-minute time frame. So if the trend has ended on one time frame, you count 1, 2, 3, 4, 5 waves on one time frame, the trend has ended. You want to know what is going to happen next, you need to go to the bigger time frame, which is medium-term trend and long-term trend, to see what's happening next, okay? So it may look like it has ended here on the 5-minute time, but that 5-minute time frame trend that you see is a part of a bigger trend. So a wave pattern on the short-term trend, in the short term, maybe, okay, a minor wave or a pattern on the short term may be, okay, a minor pattern of a bigger pattern. So what I'm trying to do here is to get your attention to this challenge that we face to connect the short-term trend to the medium-term trend to the long-term trend. So we see a pattern on a 50-minute chart, on a 2-hour chart, or on a 4-hour chart. The pattern is completed. Okay, there's nothing more to add to it. You see 1, 2, 3, 4, 5 wave. If a pattern is completed on one time frame or on one period, short term, medium, and long term, we need to see the next level in order to know what is likely to take place. Okay, if you look carefully at Microsoft stock here, I'm on a monthly chart, and I ask you what the price is doing now, what the price we're doing in the medium term, and what the price is doing in the long term trend. Okay. A trader that is looking at, for instance, you on a daily chart, you are concentrating on what is happening now, you will make a decision, or you may see a pattern, an Elliott wave pattern, according to the short term. But if you stop there alone, you can make a mistake. That's why sometimes some traders, this is the challenge first. They know about Elliott wave, they recognize the pattern, but they cannot connect, okay, different time frame, the minor wave, to the higher degree waves, okay? What is happening here for Microsoft stock is better for us to see the long-term trend first, okay? So this will allow us to come back down. So we start first with the long-term trend, and then we move to the medium-term trend, and then we go to the short-term trend. It makes sense? This will help us to analyze an Elliott wave price structure. So for a long-term trend, we start with the long-term trend first. So we see that there was a bullish, in fact, this is a multi-wave. So how do we recognize a multi-wave? A multi-wave very often will be in either a rising channel or a declining channel. And the fourth wave should not overlap the first wave. And the third wave should not be the shortest Elliott wave. That's how we recognize, okay, a multi-wave. So first thing first, a multi-wave should be either in a rising channel or a declining channel. The next verification, the fourth Elliott wave should not overlap the first wave. The third wave should not be the shortest multi-wave. If that's verified, we have a multi-wave on a particular period. Is it a short term? Is it a medium term? Is it a long term? But remember, we want to see first the long term trend first. Okay? So on this monthly chart, we see this is a multi-wave followed by a correction, A, B, C. But it's a complex correction. So in fact, what we had here, we have a multi-wave followed by A, that A has been divided into A, B, C, followed by B and C. So a multi-wave plus a correction, A, B, C, with the A being subdivided into A, B, C. The Elliott wave cycle for Microsoft has ended here. It has started here somewhere in 94, and that cycle has ended here. According to the Elliott wave guidelines, if a cycle is completed, we must check the fundamental, the market environment, and see whether a new cycle will begin or a new trending phase will begin. So in a bigger cycle, in a long-term view, we have a bullish trend, a multi-wave followed by a correction. So on a monthly chart, we may say this is a bigger first wave followed by a second bigger first wave. That is the first, okay, that's a first Elliott wave cycle from here ending here. So but that Elliott wave cycle is formed of a first wave, a second wave. The second wave is the corrective phase. The first wave is a multi-wave that has been divided into 5 waves. Now we have a bigger picture. So with that information, we are likely to navigate through this messy market with Microsoft stock. So now what are we looking for? We may have, there are 2 things that can happen after a cycle is completed. We may have a complex correction, which means we see ABC, X, ABC, multiple corrections. That's a big challenge for new traders. Sometimes we may have a complex correction, okay, which means though we say this is the end of the cycle, if the fundamentals are not solid, we may not have a new trending first straight away, but we may have another correction continue, the price will consolidate, blah, blah, blah. But at this point in time, we know that there is a multi-wave followed by a correction. So now we have a breakout of the smaller channel here, which I'm going to color now into green, the smaller green channel. So according to our wave count, we have an Elliott wave cycle that is completed here, followed by a consolidation. Now we see a breakout, so we can call this a first Elliott wave. At this point in time, we can do that until the market confirms otherwise. At this point in time, we can call this first Elliott wave. But for the second Elliott wave, the second Elliott wave should not cancel the first wave. So by aligning first, by knowing first, by identifying first the long-term trend, we will be able to dissect or to analyze correctly an Elliott wave structure. Ladies and gentlemen, as you can see, it's a big challenge for me to explain this to you, and I'm trying my best. The general rule, my friend, is that a motive wave, when we are talking about a motive wave, we are talking about the first wave, the third wave, and the fifth wave. These are the motive waves. But again, the first wave, second wave, third wave, fourth wave, all together from the beginning of the trending phase to the end of the trending phase is also called the motive wave. All right? We know that the first wave, the third wave, and the fifth wave can be divided into 5 manual waves. Yes or no? Okay? So if, for instance, we on the hourly chart, we see 1, 2, 3, 4, 5, it's completed, yes. Okay? So the first thing that we want to check on the hourly chart to confirm that this is truly a multi-wave, is he in a rising channel or is he in a declining channel? If you're in a downtrend, we'll be in a declining channel. If you're in an uptrend, we'll be in a rising channel. So first verification, is he in a rising channel? Great. Okay? The fourth wave should not overlap the first wave. Great. Okay, so the fourth wave is not overlapping the first wave. Great. All right. The third wave should not be the shortest. Okay, great. Everything aligned, the price in the rising channel. This is an impulsive wave. So we count 1, 2, 3, 4, 5 on the hourly chart. It's completed on the hourly chart. In order to continue our wave count correctly and to analyze the wave, the structure correctly, we must now go to the next time frame. We can go to the 4-hour chart. I'll prefer from the hourly chart. I'll go directly to the daily chart. What are we doing? Why do we need to do that? Because we want to connect. So if we call the hourly chart our medium-term trend, we want to call the daily chart for a day trader a long-term trend for a day trader. Okay. All right. We may call 50-minute chart our short-term trend. Okay. Hourly chart our medium-term trend as a day trader. A daily chart our long-term trend. So to speak. One example, my friend. All right. So the point that we see a wave count, we analyze a wave structure one time frame, a pattern is completed, a wave structure is completed on one time frame. On the short term trend, we need to go to the medium term trend, and we need to see the long term trend. Without that, we can go round, though we understand, though we are able to identify a wave pattern. So sometimes look at this pattern here. Okay, look carefully. Okay, let's try to draw a kind of channel here. Okay, the price in a rising channel, yes or no? Okay, it's in a rising channel, but look at the price structure, the wave structure. We count 1, 2, 3, 4, 5. Is it a multi-wave? How do we know? It's in a rising channel. Verification done. Is the fourth wave overlapping the first wave? Yes. So you see here, the fourth wave going into the section of the first wave. So it is not a multi-wave, though this is in a rising channel. It's not a multi-wave. So this is likely to be like a flag. The prime may come back down, something like that. It's a correction taking place in a rising channel because the fourth wave has clearly overlapped more than 50% the first wave. Though we see 1, 2, 3, 4, 5 in a rising channel, it violates the wave principle. This is one example of a mistake that trader can make. This is just a big trading mistake because the fourth wave should not overlap the first wave. All right? Let's look at this one again. Look at this wave structure here. Okay, so we see whether it's in a rising channel. The opposite is also true in a downtrend when we are talking about a declining channel. So the 1, 2, 3, 4, 5 waves in a rising channel. It is a multi-wave. Okay, let's start the verification. It's in a rising channel. Great. Is the fourth wave overlapping the first wave? Yes. So this is not a multi-wave. Is the third wave the shortest wave? Yes, it is. The shortest multi-wave. So we are comparing the first, the third, and the fifth. And the third should not be shorter than the first and the fifth together. So here we see that the third area wave is shorter than both the first and the fifth. This is not a multi-wave. So you want to know what is a corrective wave, and you want to know what is an impulsive wave. All right? So these are few verifications that you can do to improve your wave trading. And in any time frame, you see a pattern that is completed, a wave structure that is completed, you move to the higher time frame. But if you are able, my friend, to detect the higher time frame a trend, if you are able to identify or to dissect, okay, the higher degree wave structure, you can connect the dot between the short-term trend and the medium-term trend all the way to the long-term trend, as I've done for Microsoft stock. So I'm on a monthly chart. I say, okay, this looks to me like a bigger multi-wave followed by a correction, and we are likely to see a new cycle here, provided that the fundamentals are solid. Now, if I go down, okay, so I'm on a monthly chart, I can push it to the yearly chart. That's my time frame here. Is it adding together? What do we see now on the bigger time frame? So you're on a 50-minute chart. We say that we can connect the 4-hour chart with a 50-minute chart. We can 1, 2, 3, 4, 5 on a 50-minute chart. We can go to the 4-hour chart to validate that wave count. We can count 1, 2. Now there was a question about the 2-hour time frame. We can connect also the 2-hour time frame and a 50-minute time frame. Okay, so there is no big difference between the 4-hour time frame and the 2-hour time frame. All right, so we can connect the 50-minute time frame with the 2-hour time frame, okay, like we did with the 4-hour time frame. Okay, so there was a question like that, so I'm giving the answer right now. Okay, so on a yearly chart, we do it like a little chart. What do we see? So just ask your chart. What if I did here? The chart will tell you it went up here, daddy, and then it pulled back here, and then it went up again and come back down. Now it's going up. Okay, so you can see that this was a strong. The candle were quite strong. So we can do our verification. It's in a rising channel, yes or no. I don't want to draw it. You can see. Okay, it's in a rising channel, yes or no. Okay. All right, it's in a rising channel. But talking about, okay, how to analyze a linear wave structure, you can see that now we are on the yearly chart, okay. The challenge that we face here, we see that, okay, the price went up. Okay, the chart said to you, the price went up. There is no question about it, it went up. But now, if you are wondering if this is a multi-wave, can you confirm on this yearly chart that this is a multi-wave? You cannot, because you cannot see, it's in a rising channel, that's all you can see. You cannot see the third wave, you cannot see the fourth wave. How do we handle that? We go to the lower time frame. So if we cannot see it on the long-term trend, the subdivision of the wave pattern, the wave structures, you cannot see the internal wave on the long-term trend, we switch to the lower time frame. What we are doing, we are trying to zoom into the price. We want to see the internal waves. So here, like you see on the yearly chart, I cannot confirm that this is a valid multi-wave. But you can see the progress is quite bullish though. All right, quite bullish, okay? But if you want to go by the theory to see the internal wave and to confirm on this yearly chart, we need to switch time frame. Probably we can see it on the 2-day chart or not 2-day chart, 2 weeks chart or some monthly chart. It's not very clear on the monthly chart either. Here it is, the monthly chart. Yeah, we can try here. Sometimes it's difficult to draw it. We can say something like this, okay? Happened here. And then there was a little bit of pullback here. All right? So the key point to understand is that if we cannot see the internal wave on the long-term trend, we need to go to the lower time frame, to the short-term trend or medium-term trend to see the internal wave. Okay, 1, 2, 3, 4, 5. If you accept that. Okay? If it's not clear, we can go to the weekly chart and so on and on. Go to the lower time frame to see the internal waves. So this is how one can analyze an Elliott wave, a price structure. We are not stuck on one time frame. We are comparing the long-term trend, okay, and we are comparing it to the medium-term trend, to the short-term trend, okay, to validate the wave count. But the key point we want to understand, to add up all the dots together, we need to know the long-term trend. All right? So this will allow us to navigate through the market. As I show you here for Microsoft stock, a cycle is completed. So two things can happen. We can have a continuation of a correction, which will create a complex correction. But right now we can, okay, also say that a new cycle may begin if, okay, the fundamentals are solid. So right now we can label this first wave, expecting a second wave, or that is second wave that will not cancel the first wave. If the first wave is cancelled, we will restart counting the wave again. All right? It makes sense? So when a pattern is completed on one time frame, we need to see the bigger picture. So talking about the wave structure, I know that you must understand. So we talk about this pattern, that this is not a multi-wave. This is also not a multi-wave. Okay? Why? We explained it already. The verification that we need to do to certify a specific wave pattern. But the key point I want you to understand, apart from every wave pattern, there are 13 specific Elliott wave patterns. The key challenge that traders are facing is to identify correctly a corrective wave and an impulsive wave. Okay? So look at this one here. We have 5 waves. First wave, second wave, third wave, fourth wave, and a fifth wave. It is a multi-wave. No, it's not even a rising channel. This is not a declining channel. This is a triangle. And also, you can see that the waves are overlapping. So this is a corrective wave. So if you see a corrective wave, the question that we ask, what is it correcting? A weighted wave is always correcting something. What is it correcting? So remember the question that I asked you at the beginning? If you're looking at Microsoft stock now, we say, what is it doing now? We may say that it's consolidating and going down in a horizontal channel. So this is not a rising channel, this is not a declining channel. So we can say there is a correction here. The next question, what is it correcting? A corrective wave always corrects an impulsive wave. Where is the corrective wave? Obviously, this is not, you can see that this section here, okay, this is a multi-wave price when I verify in the rising channel, 1, 2, blah, 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 up, and then we have a bit of consolidation taking place here. Always when we see, so we want to know, is it a corrective wave? Are we dealing with a corrective wave? Now, is it a corrective wave in a short-term trend? Is it a corrective wave in a medium-term trend? Is it a corrective wave in the long-term trend? You see? So, in fact, all the way from here, if you move my dot from here, from here down to this level here is correction taking place. It's all correction taking place here. But somebody who was looking maybe in this session only may say it was trending down. But this move down is a part of a bigger correction that was taking place here. 1, 2, 3. So connecting the dots. A pattern is completed. Is a corrective wave. The structure. So the general rule is that the impulsive waves are divided into 5. But here we are, another 5 wave. 1, 2, 3, 4, 5. But it's not in a rising channel. And they are overlapping. So this is not an impulsive wave. But the general rule stated that an impulsive wave, okay, should be in a rising channel. But the fourth wave should not overlap the first wave. And the third wave should not be the shortest wave. So be able to identify the wave structure. Is it a corrective wave? Is it an impulsive wave? Now, if it's an impulsive wave, is it an impulsive wave in a short-term trend? Is it an impulsive wave in a medium-term trend? Is it an impulsive wave in a long-term trend? Okay? All right? Sometimes you may see an impulsive wave on a long-term trend, but you may not be able to see the internal wave. In order to see the internal wave, you have to go to the lower time frame to see, to dissect, okay, to zoom into the price to see the internal wave. Ladies and gentlemen, sometimes you may look and you may not see it, so don't create it. If you don't see it, if it's not clear, go away from it. Leave it alone. Let somebody deal with it. Okay, when it becomes clear, you will see clearer. Okay, sometimes we go one step at a time. It's not clear. There's no point to create it, so we just say, or you may put a question mark on it. You can't say, okay, I'm not satisfied with this. I have a bit of reservation on this wave count. I've done everything that I've done, but it's not very clear. So put a question mark on it. Know that there is a little bit of risk because it's not perfectly clear. Or you change time frame, but you can't see clearly the internal wave. Please don't send me a chart asking me to see it. If you can't see it, probably I cannot see it also. All right? So sometimes you may not see it. Okay? There's nothing you can do about it. We can only work with what you got. Okay? All right? So we say that we can connect a 4-hour chart and a 50-minute chart. So we see 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5 on a 50-minute chart. That's a 5 wave on a 50-minute chart. Maybe just one single candlestick bar on the 4-hour chart. One tall bullish candlestick bar on the 4-hour chart. Or a price move on the 4-hour chart. From A to B on the 4-hour chart. You can see on an hourly chart, 1, 2, 3, 4, 5 wave. On that 1, 2, 3, 4, 5 wave can be just one single price move from A to B on a daily chart. You can see 1, 2, 3, 4, 5 multi-wave on a daily chart. That 1, 2, 3, 4, 5 wave can be only a single wave, a single multi-wave on the monthly chart. All right? You can see 1, 2, 3, 4, 5 wave on the monthly chart. That 1, 2, 3, 4, 5 wave is only, okay, a medium-term trend on a monthly chart, and the long-term trend may be on the yearly chart, which is a bigger cycle. Looking at the long-term trend view of Microsoft, it's a bullish. We have a bigger multi-wave followed by a correction. Are we in a third area wave? That remains to be seen. In order to have the third area wave, the price might find a support above the high of 2,000 for Microsoft. Now, we will not have, okay, a dynamic third area wave if, okay, the fundamentals are not solid. They need to invent great product, get more market share, and the high of the first wave should be taken out. Fundamental plus technical will create, in fact, in order to have a stronger, okay, a long-term third wave, the global economy should be bullish. It makes sense? So we are going from the higher time frame. We want to know the long-term trend, all right? Okay? In order to fit in the short-term trend and the medium-term trend. And this will allow us to use the wave principle to forecast the market. The challenge that we face is to analyze each area wave price structure. Is it a corrective wave? And most importantly, is it a corrective wave in a short-term trend, or is it a corrective wave in a medium-term trend? Is it a corrective wave in a long-term trend? If it's a corrective wave in a medium-term trend, what is the bigger picture in a long-term view? All right. If it's not clear on one time frame, we go to the lower time frame. When we count wave on one time frame, we must validate on a higher time frame. It's all about wave structures, okay? But the key point is here corrective wave, is here, okay, an impulsive wave. Where are we? So we have patterns that we call also, okay? For instance, we talk about a flat correction, okay? When we have a multi-wave followed by 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. This is a specific wave, a pattern. So the challenge that we face again, talking about how to analyze an Elliott wave structure is where is the pattern taking place? Okay? Where is the flat correction should take place? Go to 24elliotwave.com and click on flat correction. When and where do we have a flat correction? Where and when do we have a zigzag pattern? Is the pattern taking place at the wrong place? So if we see a flat correction, but we didn't see any multi-wave before, what kind of a flat correction is that? So a corrective wave, general rule, should correct a multi-wave. So we see something, we say a flat correction. Or we see, okay, a double retracement, all right? And then we see a multi-wave that follow a double retracement. It's wrong. A double retracement usually is followed by, okay, a corrective wave. So a double retracement plus 1, 2, 3, 4, 5 waves that are overlapping. So a double retracement is not a full pattern. It's a double retracement plus 5 waves down or 5 waves up. Okay, that's what we call a flat correction. So where is the pattern taking place? A zigzag. 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. So this is about knowing each pattern also. So apart from knowing that a zigzag is a corrective pattern, we want to know what is the wave structure of a zigzag pattern. Where and when do we see a zigzag pattern? Okay, a flat correction is a corrective pattern, okay, a corrective wave pattern, okay. But what is the wave structure of a flat correction? What are the different type of the flat correction? When and where do we have a flat correction? Okay, so it's not sufficient to know that. It's important to know that it is corrective wave or it's an impulsive wave, but we want to know what type of corrective wave do we have here. Is it a triangle? Okay, is it a flat correction? All right, and so on. It makes sense? So, as you can see, it was not easy for me to transfer, okay, this tutorial to you, to transfer this knowledge to you. And it's quite a challenge for traders to get into the habit, because I know some traders, they get it now, they know the wave pattern, they understand it, but they are having difficulties to put them into use, to put the wave principle into use, and to make excellent decisions. Because the challenge when it comes to live trading, you're on a 5-minute chart, you count 1, 2, 3, 4, 5 waves. How do you connect the dots? What is the bigger picture, the long-term, medium, and short-term time trend? It makes sense? It is also powerful. Another thing that I want to tell traders, the price is always moving from A to B, okay? So by highlighting the key support and resistance level, okay, one can also analyze the wave stretches, okay? So you will notice here that I have the channel here. You see the price confined in this channel here, okay? By drawing the channels, the key level, the resistance level, you can see the pattern. So you count you label your wave count. If you count 1, 2, 3, 4, 5 wave, draw an horizontal line at the top of your 5th wave, another horizontal line at the low of your 5th wave. Check whether they are corresponding to the low of your first wave is corresponding to a key support level, and the high of the 5th wave is corresponding to a key resistance level. If you label, for instance, a resistance level, try to bracket them with 2 lines to see is it adding up. Okay, a correction very often we see in a horizontal channel, okay, or in a triangle. Okay, So you want to bracket your wave level. So corrective wave, try to label it. Is it confined between two levels? What channel do you have? Is it in a rising channel? And then go deeper and deeper and deeper. Okay? This is the end of this video about how to analyze an Elliott wave price structure. An impulsive wave is formed of 5 minor waves, but the fourth wave should not overlap. Okay, the first wave and the third wave should not be the shortest wave. In order to validate an impulsive wave, one should check first whether the price structure is in a rising channel, the third wave is not the shortest wave, and the fourth wave is not overlapping the first wave. These are the verification to validate an impulsive wave. When we see an impulsive wave, okay, we want to know whether the impulsive wave is in a short-term, medium, or long-term trend. We want to align the short-term, the medium-term trend with the long-term trend. It is crucial for us to know the long-term trend, to know where we are in order to forecast the next price move. The general rule for an impulsive wave is subdivided into 5. So we're talking about 5 for an impulsive wave. For a corrective wave, we are talking about 3, 1, 2, 3, represent correction. The correction should be in a horizontal channel or a triangle. And now, is it a corrective wave? We want to know. Very often, the wave should be overlapping, okay? We want to know what type of correction is taking place and where, most importantly, where and when this type of correction should take place. The flat correction will take place after a strong, okay, bullish multi-wave. That's why it is flat. So when and where the wave structure is taking place. Is it taking place at the right time, at the right place? Okay, it makes sense? All right? When we want to see an internal wave, we need to go to the lower time frame. So we go to the yearly chart or monthly chart, we cannot see the internal wave. We go to the lower time frame to zoom into it to see the internal wave. When a pattern is completed on a time frame, we need to go to the higher time frame to see the higher degree wave pattern. The wave pattern is a fractal pattern. It's a continuity. First wave can be divided into 5. Third wave can be divided into 5. Fifth wave can be divided into 5. And each multi-wave can be divided into 5 or any time frame. They are all connected. So a wave count on one time frame, one should move to the higher time frame. If it's completed on the next time frame, so you go hourly chart, and then you switch daily chart. It's completed on the daily chart, it's clear. You go monthly chart is completed, yearly chart, and so on, and so on, and so on. It makes sense? It is also powerful, okay? The purpose of this video is to help traders avoid a wave count mistake and to be able to analyze an Elliott wave price structure. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. Okay? If you love it, please feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, feel free to subscribe to our channels. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to analyze an Elliott wave price structure. Speak to you soon.